Welcome to another episode of Millennial Investing Explained. Here's today's question. And so now I want to shift to the last part of the show, and I want to talk about having realistic expectations, especially for a new investor or a millennial investor. Like I said briefly earlier, a lot of the investors that I've worked with, that I've spent time with, have heard about investing from get-rich-quick schemes from these so-called gurus. And I can't tell you how many times I've had friends of mine come to me and ask about investing in some new craze or a hyped up company or something like that. And I believe it's very important to have realistic expectations and goals so you're able to make rational, data-driven decisions that make you money over the long term, rather than making emotionally driven decisions that are going to hurt your investment returns. If you listen to the hype or the get-rich-quick schemes, you're going to make bad decisions based on your emotions, which will likely lead to you losing money, and therefore you're not going to want to invest anymore. But the reality is this: if you're not starting with a lot of money, you cannot expect to replace the income from your job and live off your investments right away or retire tomorrow. You're not going to double your money overnight. You should be targeting between 5 to 10% annually, as that's historically what the stock market has done. Anything you're able to earn above that is a bonus, and of course that's great, but you should not plan for it. Your investments are going to go up and down over time, sometimes irrationally without much of a reason. But if you continue to make well-informed, data-driven decisions, and you have a long-term strategy that you're committed to, you invest early and often, you keep your fees low, and you don't let your emotions get the best of you, you can do very well over the long term in the stock market. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.